Okay, so now let's go through some questions. So when you read, try and look at this question. In consolidated statement of cash flows or in cash flows in general, you always have to prepare T accounts using information from opening and closing statement of financial position and the statement of profit or loss for the year. So it is the same principle. Every item you are looking for, you can prepare a T account for it. And I'm choosing to teach you through the T account. But as you learn and you understand the workings, you can decide the way you want to do these things. The T account is easier to explain, easier to understand. So I'm going to use T throughout. But you can use the statement form, which is what I use. But I use it because I understand. But you are learning it, learn, master, and choose and use anything. Because whether you use T or the statement, we should all arrive at the same figure. Remember, your intention is to get the cash inflow or the cash outflow. Every T account is to help you to get cash inflow, cash outflow. So let's take question 1. The following information has been extracted from the consolidated financial statement of Wajim. So you have 2017, 2018, and the non-controlling interest and profit for the period. And the requirement is to calculate dividend paid to non-controlling interest. Dividend paid to non-controlling interest. So you want to get the cash element from dividend paid. Now, your NCI is an equity item, which means it has a credit balance. So you have your balance brought down, which will be the 2070 one, and that will be 27,600. And then you have your balance carried down, which will be the 2018, and therefore that will be 31,200. Then the profit for the period attributable to NCI from the statement of profit or loss, consolidated statement of profit or loss. Profit attributable to NCI is the it is the profit for 2018. So that will be the 4,800. 4,800. And that will increase NCI balance. So you consolidated statement of profit or loss will bring in 4,800. Now, if you do this, you are getting 31,400. No, 32. You are getting 32. 32. Yeah. Eraser. Okay, so you get 32,400. Yeah. 14, 12, 3, 32, which is bigger than 31,200. And therefore, you have a difference of 1,200, which goes to cash. Okay, let's prepare this better. So prepare your T account for NCI. T account for NCI. Your balance brought down is a credit balance. Your balance brought down is a credit balance, which is 27,600. Your balance carried down, which is the 2018 figure is your 31,200. 31,200. And then share of profit attributable to NCI. So from consolidated statement of profit or loss, we have 4,800. And that gives you a total here of 32,400. 32,400. And therefore, your out, cash outflow, cash to NCI is a payment. So we are debiting NCI and we are crediting cash. Cash outflow is 1,200. This is your cash outflow. So that's what we are saying, that for everyone, you will prepare a T account. So that's for the first review question. In question 2, let's take this off. In question 2, you are provided with extracts from Halim Limited consolidated statement of profit or loss. So you have consolidated profit or loss. Consolidated profit or loss. And therefore you have share of associates profit. Now the requirement is to calculate the relevant figures to be included in the group statement of cash flow. So it's about investment in associates. It's about investment in associates. And you know, in terms of consolidated financial statement, the parent recognize each share of the profit from the associate, share of profit. So you can see it is before the tax. So it comes before the tax. So this figure must be taken out of the operating profit, profit before tax. It must be deducted. It must be deducted because it will be shown as an item under investing activities. It's an item. Investment in associates, as it is, investment in associates is an investing activity. So the cash element from that will be reported under investing activities. But let's see, how much are we taking to investing activities? And that's what you have to deal with. So as usual, we are preparing a T account. We have the carrying value of the interest in associate, and we have a loan to the associate. Now, when you take the loan to the associate, the movement is straightforward. 2017, it was 12,000. 2018, it was 15,200. So just by looking at it, it's an increase. So this is cash flow, additional loan given to the associate of 3,200, of 3,200. So the loan has a cash flow of 3,200, which means we are debiting loan to associate and we are crediting cash. So it's a cash outflow of 3,200. But if you want to know the carrying, the cash element in the investment itself, then we have to prepare a T account. So let's go prepare the T account. So again, because you are going to prepare T account, you will need the opening balance of investment in associates, which is this figure, the opening balance of investment in associates, the closing balance of investment in associates, and the share of associate profit. And then these are the figures you need for your T account. So if we even try to squeeze the T account here, investment in associate, remember it's an asset. So your balance brought down, which is 18,240, will be debit. 18,240 will be debit, and your balance carried down then will be 18,640. 18,640. Then the share of associate profit, remember we add it. So you debit share of associate profit. So this is from consolidated statement of profit or loss, share of associate profit, which is 1920. And once you do that, you have your cash, which will be an inflow. Remember, this will be an inflow. You are going to get an inflow of 1,520 because the total is 160, I think. 160. 160. So you are going to get a cash difference of 1520. 1520. It is a T account. Try and prepare it. You need your opening investment in associate, an asset, closing investment in associate, then your share of investment in associate, which is supposed to increase the investment in associate balance, so it will be a debit. Then you determine the difference as the cash inflow. So it's a credit in the investment in associate account and will be a debit to our cash. So it's a cash inflow. But the movement in the loan, which is 2018 15,200 minus 12,000 will be an outflow. So there is an outflow of 3,200 and there is an inflow of 1,520. And all these two figures will be recognized under investing activities. Investing activities. Okay, great. Try it. Prepare T accounts. We all can prepare T accounts. Try it.